What's up, guys? We are back here again, Framework Fortune, bringing you another episode, another sweet episode of how not to lose money in the trash can. Most of the stocks that we trade are set out to lose you money. We want to be some of the few, some of the proud, some of the brave, but not Marines. We want to be money makers. In this episode, we'll be going over a very popular pattern that has seemed to be working in this market, which is the double bottom. Now, the double bottom is a confirmation pattern, right? It is a support level being formed off of a supply and demand drop in a specific ticker. So you see the price levels actually dip down to a support level, but you don't know if that support level is valid or not. And so we look for the double bottom, a retest of that said support.
Yeah, man, we're going to just talk about these patterns. These patterns have been high percentage win rates for a lot of traders statistically throughout the market, not just the Framework Fortune community. But if you are looking for these patterns, you're going to have a high probability of profit versus a low probability of risk, which is what you want. Low risk, high profit trades.
So we're going to start on HHTrader, and these are actual trades that I took. I've traded these. I'll give you the dates and the entries and exits for these trades. On HHTrader, we'll start on the 4-hour chart and then we'll work our way. We'll probably just go down to the 15-minute because there's no point in going to the 5. I only use the 5 for entries. I use the 4-hour, the hour, and the 15-minute for my actual analysis. On this chart, when I was looking at it, there was an amazing amount of volume, right? And this thing got absolutely rejected early in the morning at the open. We can see this on the 4-hour chart. Pre-market, it did take quite a little bit of a dip down here to the 150s and then shot all the way up here to what is the 200 moving average, the 200 SMA on the 4-hour. And so that is the 280 level. And then it got rejected all the way back down here. Now, in my mind, I'm thinking, okay, can I identify a double bottom in this pattern? Can I see a price level where the demand is so high that it bounces off that level? And so on the 4-hour, that is very hard to see. What we can do though is we can identify levels of support. The previous levels of support here were right here at this $2 mark, right there on that whole dollar, and it had got up there the day before in pre-market to the $2 and had returned there in pre-market. And so I was like, okay, there's a little bit of support there. That looks good. So the hour chart on this same time frame gives us a little bit more look in detail to what was going on with this big pushback. So on the hour chart, this was the $2 level here that it got pushed back to. We can see that there was a huge indecision candle here on the hour chart. And this is an indecision to the downside. Now, what do we mean by indecision? On the previous candle, there was a huge green buying move there. Huge. And we can tell this, I mean, it's a big green candle, huge green body. Now we have a big green candle, small green body.
Very small.
It's very small. Like you can put a penny on that. And
yeah, that's like a war between buyers and sellers. That candle represents a war ground. That's the indecision.
Exactly.
Buyers, sellers, and shorters are fighting it out in that candle.
And the problem is the war ground, the bigger the war ground, we call that momentum. So when you see a green candle, a huge green candle, and then a huge green candle, and then a huge green candle, the buyers have the battleground.
Yeah.
But in this situation, the buyers and the sellers are both at almost a stalemate. Now, it did close green, but still, that's a lot of indecision. What I'm looking for on this is the double bottom. Still looking for it, and I got some confirmation here on these two candles right here. And it came down to the 206, and I was like, okay, it's bearish. We're going to let this candle close to see if it can go ahead and break down that $2. On the next candle, it came all the way down here to the 205. Could not, just repeated times of not being able to break down that $2, and it immediately popped back up through this little bottom here. So I was like, okay, I'm gonna call this a double bottom, and it worked out. It stayed in this range here and traded around here. And let's go ahead and drop to a lower time frame here, so y'all can see even more in detail of what's going on. So on the 15-minute, not only do we have the double bottom confirmation on the hour chart, we have what looks like a triple bottom on
Yep.
the 15-minute in this little section. And my entry price on this one was 211. Right as it was exiting back over that 210 level, I hit the buy button. And I was looking for this thing to at least make it up here to this previous resistance here.
On that support level of that triple bottom on the 15-minute, what you're seeing is the shorters had control of it off of that spike, but the shorters have to cover. And when they cover, that means that they are buying the stocks back, because when you short, your entry is borrowing shares and selling them. So when you exit your position as a shorter, you have to buy back in, and that causes buying pressure. So if that $2 area was a support area, which it did show as, the buyers were coming in to try to hold it up as support, and the shorters were seeing that weakness and already made a nice profit from bringing it down off of that top spike. So they start covering, adding more buying pressure, and then that causes a nice bounce, and then you see new buyers start to come in after that.
What we're looking for is that supply and demand pivot. When
Yeah.
the supply get to the point where it is so low, they've won so much that the supply is so low that any bit of demand starts to push that price back up and cause those sellers, especially late sellers. That's what we want to
Yeah.
capitalize on. We want to capitalize on those sellers that are getting in with the intention that this thing's going to continue down, but they're wrong. And that's where we make our money. Sometimes during the trading days, sometimes we look at the level twos and we're like, this is buyers coming in, this is sellers coming in. But in these situations where the candles are getting smaller and smaller and the supply is going down, 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 and the demand starts to come in, it's almost always buyers coming in there pushing that thing up. And then when it's at a top or a peak like this and you see big bids, big ask coming in, it's almost always sellers coming in. And well,
Yeah.
the real ones, the real ones.
And also the buyers who got in on the beginning of that rip or in the middle scalping,
Mm-hmm.
they're turning into new sellers at that top as
Mm-hmm.
well.
Exactly. And this stock definitely formed a very obvious double top. Very
Mm-hmm.
obvious here. I mean, on the 15-minute, exact same levels, and absolutely just started going down. So the double
Yeah.
tops and double bottoms are very high probability plays for a reversal. Now,
Yeah.
sometimes you get a triple bottom, triple top, or whatever, or you can get a pivot back to the other direction, but that's why we manage risk. We keep those stops there. So if we are wrong, hey,
Yeah.
accept defeat.
Exactly. Because there's not 100% any probability of anything in the stock market. So
Mm-hmm.
always keep your stop losses tight.
My entry here was 211. My exit was 230. So it got up here right around this level, and I was looking to get on down right up here. I was kind of nervous about this little touch. I was still in after it touched this level here of the 245, but it rejected off of this previous level of resistance. And I was like, I need to be trying to take off something, because in this one I had 400 shares there, and I just don't like giving back profit. I need to take something after making a good decision.
Yeah. That red candle right there could have easily turned into a double top, and it could have went down lower.
All right, let's jump over to the next one, which is NRSN. Let's start with the 4-hour, and the date that I traded this one right here on the 30th here. So we already saw that in pre-market, somebody was doing some shenanigans, right? We see this huge rip up in pre-market, and I'm like, whenever I see something like that, I'm like, okay, whoever is buying this with this low volume in pre-market, they have plans for this thing to either go up exponentially or down exponentially. I don't know which one is going to be, but I don't want to get caught on the wrong side. Because
Yeah.
when you identify big fish in a pond, you need to swim with them.
You want to be the little sucker fish that sticks on the back of the shark. You don't want to be the tuna fish that's in the way of the shark.
Yeah. So identification of these resistance, like after the day started, there was a obvious level of resistance formed here at the 424 right here, and we're looking for the double bottom. Obvious level of resistance there though. Double top there, and then back off here to the hour chart, we can see that double top even clearer, and we see a continuation, a pickup of momentum of supply, right? And so that's sellers picking up momentum to the downside,
Yeah.
right? There's too much supply. People are like, no, there. And why is there a lot of supply? Well, if we look at pre-market, where was the price when this thing started? 248. And then all the way up here to the 484s. Of course, people want to sell, but it takes
Yep.
time to sell out of a big position. If
Yep.
somebody took, let's say they took, let's just get exponential. They took 4 million shares of this at 250, and it comes up here to $4.78. That is a stupid amount of gain. But you need 4 million people behind that to sell to. That's why we see this momentum. Somebody's trying to get out of this position,
Yep.
right? And so we see this push down and sellers are winning. Somebody's swimming with the big fish. We can see this big push down here on the hour chart and all of these wicks. But what I'm looking for is for buyers, the big buyers, to come in, or for sellers to come in to cover, or both. This double bottom came here at around this the bottom of this counter was the 356, right above the 350, and we know whole dollars and those quarter dollar levels can be some major levels of support. So
Yeah.
350 was the key that I was watching on this one. I was like, this looks interesting. And so it came down, bounced right above the 350, could not break it down, popped back up to this 369. And I was like, this is starting an uptrend. So I kind of drew the uptrend here, but I wanted to see that uptrend get tested for a double bottom. And so I saw this come back down, break the 369, break all the way down here to the 364, which is 14 cents away from 350. So somebody has a shield there, 14 cents of shield above the 350. I'm like, somebody's trying to keep this thing off the 350 for right now. And so I saw that little buying pressure and I hopped in there as it started to eat up the previous body of this candle here. So the body of this candle is what, the 382 was the break back over and the start of a pivot over these levels. And let me go down to a lower time frame. And this was a little trend that I saw on the 15-minute that I drew here. It just came down and it was just working its way on this trend. It tested it twice. That's a double bottom confirmation right there. 1, 2. And I was entering in here for the break of that $4. This one was a 50 share position where I took the first double bottom position with 25 shares, and then I just added 25 to a winner because it was already winning. Went up here and it tested this level of the 445, which was a previous level that it had been up to. And we had this other level sitting right here from the pre-market. This other level is right around the 450. Now we know there was a shield down there on the 350. And I was like, okay, so now the 450, this is a dollar move up. How is it going to act at another 50? Are people going to get scared? Because the 50 looks it looks a lot alike when you start looking at the chart. You're like 350, 450. That fear was there. I took half off around that 440 level. And then I had my other half just in case. I had the other 25 started here at the 406. And it dipped down here to this little, 418, and it popped back up. So I immediately moved my stop up here to this 418. and it went up and started testing this level again. And I said, okay, either it's going to go or I'm going to stop out right here at the body of this candle, which was the 436 there. And it came down and it stopped me out and took out the rest of that body. So I stopped out green on that one.
And that was a triple top right there that it made. 3 different attempts of those candles trying to test that 445, 450 area.
Mm-hmm.
And it failed to crack. So that triple top on that upside into resistance, that right there shows you a pivot's about to happen again. So all you're doing is just looking for momentum to start changing in the direction that you want the stock to go. When the big shark is starting to swim in the right direction, you just hop on and start eating up all the tunas. And then when you get to where the shark is going to run into other sharks, you just hop off, go about your day, go buy you some lunch with that money you just made, or buy something nice for your wife.
Exactly. Another thing that I've been putting into my trading is allowing bars to close, allowing candles to finish. So on this little dip down here, if I would have moved my stop into this level before this candle closed, I would have got stopped out. I waited on this candle to close. Remember, my stop was here at the 418. This was the level that it hit, and it hadn't closed yet. It had started to pop back over this level, the 425, which is a $0.25 level. And so I was like, okay, this quarter may hold. So I just put it right under this at 417, and it popped back up here to the 436. And I said, okay, at this point, let me see where this candle closes. It closed like it is now. And so I moved my stop to the bottom of the body of this candle after getting that confirmation of where the war zone was, the body of that candle. Because, I mean, it could go higher, but if it comes down, I want to be stopping out on the body of that candle, which is what happened.
Yeah, and you see that stop out was a good stop out because it just dumped right after that.
Mm-hmm.
So that's why you want to be keeping your stop losses tight, so you're not taking big risk. You're taking the low probability trades, especially in this volatile down market that we've been in since the beginning of this year. We've been on a downtrend. Resistance lines are holding strong. Support lines are holding weak. So when you do see a double bottom that confirms a support line holding, probability is there is going to be some type of buying pressure to pop it up, even if it's for 20, 30 cents, 40 cents like on this play.
Mm-hmm. Yep. All right, so let's jump to the next one, REVB. We'll start that one on the 4-hour. I traded this on the 30th as well, June 30th. On the 4-hour chart, we saw that it got a huge push down in pre-market after running or ripping up. It started here during the previous day at 50 cents. 50 cents. Got bought up here to 78 cents. And, at this point, I wasn't watching it. I don't, there was not big enough supply and demand for me to take any kind of trade on this. I didn't even know about it. During this pre-market, got some supply and demand, and I started watching it. And remember, we want to see where these big fish are first. And these huge bars are the big fish moving the stock. And so we saw it pop up here to almost a $2 level, right around that 190, 195-ish level, and got absolutely slaughtered. It came back up, slaughtered. Came back up, slaughtered. So let's go to a lower time frame to actually look in depth to these and see if we can spot a double bottom. And here we are on this chart. So this is a little bit more look into the 4-hour time frame, what was going on inside of those candles. On these candles, we can see that there was some indecision. After this buy up, there was some indecision on these sell bars. Did not want to really go down. It had a big breakdown here, but that breakdown failed. Broke down here to the 131, popped back up to the 135, and then the shorts got scared and there was a big covering. That was all pre-market. So remember, pre-market, a lot of these pre-market moves are psychology plays, right? People play on big fear because there isn't a lot of volume yet. Right at the open, we saw another try to get this thing back through the 130s, but guess what? Those shorts that were scared here, there was too much demand and covering at the beginning. So we see
Yeah.
that first candle absolutely explode on fear. And then we see this pullback where now that the fear, there's a relief of the fear. Now that it's tested this or kind of reassessed this high of the 195, the shorts are like, didn't break it.
Hmm.
So they got the confidence.
Couldn't even get to that $2 resistance area, which was
Exactly.
strong confirmation for shorts.
Off of this, like Ben was calling out, there was something setting up in the works. And we'll go over that in a little bit. But first, we're going to identify the double bottom. So after this big fear relief for the shorts start to build momentum to the downside. They start to absolutely eat into this, eat, all the way back down to guess where? The previous level where the fear was, right? In the pre-market, people are like, ooh, this is that level that got exploded upon earlier. Maybe we don't want to take part in this. And so we see this big buying up as it comes into this level. And in my mind, I'm thinking, okay, this is a double bottom because this is where fear was and it's regaining strength. It's regaining, people are like, oh, no, no. Especially now, if you were not there at the open, or actually if you were not were there, whatever, you can tell that there was something that went wrong here. Okay, so doesn't really matter when you started your trading day, if you started in the mid afternoon, whatever, as long as you were able to identify this point as a fear point, you're good.
Yep.
So it got that buy up here, and I call this a double bottom right here at their fear
Yep.
spot, the previous support. And I got in, what is this, REVB? I got in at 141. So it pulled back up here. And again, I let the candle close first. And so the candle closed at this level and I entered right here, 141. Because I wanted to let the candle close because, it could easily just go ahead and dip through. So let it close, got in at that 141 and got this nice pop up on this fear. And the previous resistance level was right here at the around the 150 level. And so I was like, okay, well, we've already decided that this was a relief area, 193. We've already decided that there is a heavy level of resistance at the 170. And now, if this thing is going to continue to build its way down, I want to be taking into consideration the next level of resistance here, which was a level of resistance previously in pre-market and a level of resistance here in intraday. So I was heavily looking at that as resistance and a place to sell, which is what I actually did. My exit here was the 151. So I got in right here at 141 and I sold right at this 151 when it started to fail right back through there. I actually moved my stop right under that level and it just stopped me there. It was a little bit of slippage because it was right at the 154. So it was about a 3 cent slippage there, but that's okay. I took profit. As we can see on that next candle, the fish were fried.
Yep. Because it made a double top right there where you sold at, probably from other people selling, and then that overall pattern is a head and shoulders pattern.
Exactly. Let's go and jump down and see even further in detail on the 15-minute here. He said there is a double top, and right here on the 15-minute, we can see that pressure is definitely there. So this was the little range that was kind of played with, a psychology play in here on the pre-market. Big pop up to the relief, comes down here, finds a little bit more fear, and people start covering into the next resistance, which becomes the double top at 157 right there. My fear here, I didn't know if it was going to absolutely plummet or if it was going to form a range, but I did know that if it did form a range around this level of the 150, the chances that it was going to drop was kind of high. So I was like, yeah, I'm gonna go ahead and take my profits. That's what we're looking for, is those nice double bottoms. Now this one didn't have a really strong catalyst, but it had a lot of supply and demand, and there was a big psychology play here on the shorts. When
Yeah.
will the shorts get to a uncomfortable position? When are the shorts on the fire, basically?
Yeah. When the shorts are covering, when are they coming in and turning back into buyers?
Exactly.
That's what we're looking for. We want to join the shorts when they're buying, so it pushes up that momentum, and new buyers will feel comfortable coming in on those support levels to get the nice bounce. So that's it for this lesson on double bottoms and where we're looking for right now in this down market, since the NASDAQ has been downtrending since the beginning of the year. Trying to get big breakouts are not high probability. Double bottoms, bounces off of support where they're getting that second confirmation, second bottom, that is a high probability upward momentum play that we're seeing across all the markets. So study up on those double bottoms, start trying to identify them, and capitalize. If you haven't yet, go check out HHTrader's channel for some live day trading most days out of the week, as well as tons of technical analysis and other stocks to watch. And make sure you hit the subscribe button here on the Framework Fortune home channel. Then be sure to get in the description and join the Framework Fortune Discord.